Assalamu alaikum. This video is about the comparison between direct taxes and indirect taxes. My tip to the students would be whenever you talk about taxes, do mention the tax you're talking about. Is it a direct tax or indirect tax? Because the impact of these two taxes could be quite different from each other. The chances of you getting confused and the chances of you getting producing a reply or response which is confusing will reduce if you specify the type of tax each time you talk about taxes in any of your essays. So when you write tax, do not write just tax. Do mention you are talking about indirect tax or you're talking about a direct tax. So the difference between a direct tax, take out your pen and a notebook so that you take the notes. I won't be writing much, I'll be speaking more. So direct taxes are on income. Indirect taxes are on expenditures. Whenever you earn and pay a tax, that is direct tax. Whenever you spend and pay a tax, indirect. You get a top of your cell phone, mobile phone ka top up karwate hain, you pay the price and the price includes some tax. That is an indirect tax. You go and get the fuel tank of your bike or your car filled. That fuel is costing you amount of money. That amount of money includes some tax amount as well. So the amount of money you paid while buying fuel, while getting a top up, while having a takeaway, while having a restaurant meal, the tax you are paying is indirect tax. On the other hand, if you are earning a salary, if you are a teacher in a school and you are earning a salary every month, that salary, out of that salary, you are bound to pay a tax. That tax is a direct tax. Example of direct tax. So first I told you the difference. Direct tax, income. Indirect tax, expenditures. Example is income tax. Direct tax example is income tax. Indirect tax example, VAT, GST, goods and services tax or general sales tax, import duty. These are the examples. Direct taxes, they are progressive. Direct taxes are progressive. They are fairer. They reduce income inequalities. There is only one point. They are progressive, they are fair, and they help decrease income inequalities. Why? Because progressive system taxation involves raising tax rate for those who earn more. So those who are earning more pay a higher percentage of their income as a tax. That means that they'll be paying a greater part of their income as tax, and those who are at the lower income level, they will probably be getting a transfer payment or some assistance from the government from the help, those revenues which high income earners are giving to the government. So the gap between rich and poor will fall. So for example, if one person is earning 100 and the other is earning 1000, so there is a gap of 110. But when there is a high tax on the person who is earning 100 and no tax on the person who is earning 100, the person who is earning 1000 probably will be getting post-tax income of 900, 800, 700, depending on the tax rate. And the person who is poor, not paying any tax, still getting 100, and the rich person now getting 700, for example. So the gap between both has gone down from 10 to 1 to 7 to 1. So these taxes are progressive. They are fair because rich people should pay more taxes. That is the fairness, and they decrease the gap between rich and poor. Indirect taxes, on the other hand, are regressive. They have a greater impact on poor people. For example, if petrol price goes up by 55 rupees, once again, if it goes up by 55 rupees, the rich person who is earning millions a month, for him that expense of 50 rupees per liter extra may not be that significant, may not burden him that much. But a person who is on a very limited income, on a very low income, will suffer more because of that extra tax of 55 rupees on petrol price. Because for him, the expense will be a higher percentage of his income. So indirect taxes are regressive. They raise the gap between rich and poor, whereas these taxes reduce the gap. Another difference between direct tax and indirect tax, relatively easy to hide or conceal your income. But it is relatively difficult to hide your living standard. Living standard means expenses. In which type of house you live, which type of car you drive, which type of schools your kids are studying at, it is difficult to hide that. That is why tax evasion is likely to be easier in case of direct tax and likely to be more challenging in the case of indirect taxes. However, if there is an informal economy, an economy where there is no documentation, tax evasion in both cases could be, of course, high. The third difference between direct and indirect tax is their impact on inflation. Direct taxes are a tool of contractionary fiscal policy. They reduce AD, aggregate demand. Aggregate demand shifts to the left. So direct taxes help control demand, pull inflation. On the other hand, indirect taxes, they raise cost of production. They shift the AS curve upward, aggregate supply curve upward, and they may trigger cost push inflation. So that is the third difference. Another difference between direct taxes and indirect taxes is that the effect of direct tax is more general. That when income taxes are raised, the incomes of everyone will fall. However, if government wants to control or alter the consumption of one particular product, one particular commodity, indirect taxes are more effective and more useful. For example, a demerit good. So if government wants people not to consume cigarettes, so a direct tax and a tax on income will not be effective. What will be more effective? A sales tax or an excise duty on the consumption of cigarettes. Similarly, if government wants to decrease the imports of some non-essential commodities and government wants people to buy locally made goods more and import less, in that case, their tax again may not be effective because when their taxes are imposed, people will decrease demand not only of import but also of locally made goods. So if government wants consumers to switch from imports to locally made goods, in that case, import tariff, which is an example of indirect tax, that will be more effective. So direct taxes are fairer. They help control demand for inflation. Their effect is general, and of course, they're more progressive, and the tax evasion is likely to be easier. For indirect taxes, they trigger cost push inflation. They are regressive. However, the impact could be specific to one single commodity. I hope you like this.